Greetings to everyone who is joining us right now. I do believe our participants are now entering Zoom session. We would have to wait for up to 1 minute so everybody is inside and then we can start. For those of your colleagues who cannot join Zoom, and we actually very positively surprised that there was a quite high demand in attending this event, we suggest that you go onto Brelf Forum Facebook page where you can do live streaming of this event. But with no further delay, I'm helping to open our session where we'd like to share our insights and how do we see the market. We call it Property Snapshot, second quarter of 2021. We will be talking about investments in real estate. We will be talking about offices specifically, following by retail, and then industrial and logistics. And for the dessert, we'll have a really nice discussion with two significant developers across the Baltics about their vision of the office development in our countries. On this note, I would like to give word to my colleague Margus, who will be talking about investments.
Thank you, Eriks, and I welcome everybody to our second quarter webinar. I hope you will enjoy it. You will have the opportunity to ask questions also. We try to answer them at the end of the webinar if we have time. But also you can send the questions via email later on to our experts. So, investments. Let's say, as we always say, or at least I say, that I consider investment field as a kind of health indicator of the whole market. And if I look at what is going on in the investment market, then let's say it's very hard to see where the crisis is. There is no crisis if I look the investment activity, volumes, what is going on, and so on. So second quarter 2021 was continuously active. Maybe even a little bit surprisingly active, but then again, there are quite obvious reasons, let's say, why this activeness is continuing. Maybe the first reason is that there is a lot of capital still seeking opportunities, places to be invested on the market. Financing is still available and pretty okay conditions. And I would say that at least this year or in the second quarter specifically, I've heard more and more talks about fear of inflation. So people are looking opportunities also from outside this kind of typical real estate industry to invest in real estate and in commercial real estate. And that is reflected also in a very big interest coming from smaller investors as usual, and still 80 to 90% of the total volume is comprised out of investments into a maximum 5 million euro deals. So it's still a majority of the deals are small deals, but also the large investors are very active and continuously seeking for new opportunities. The total volume of first half year 21 was approximately 640 million euros in Baltics. That is almost twice the amount of year before, or the first half of 2020. That is quite significant number, and I would say that if this continues and there are reasons that we can say that it might happen, we will see quite nice total volume for the whole year 2021. The most active region in Baltics was Lithuania, where almost half of the first half year volume was created, followed by Latvia, and Estonia was in third place in first half year results. So the question is, as I mentioned, investors are there, but where are the products? And this is the main challenge at the moment in the market, to find suitable, good investment grade products, especially for the larger investors that are looking core and strong properties. And as reality has proved, so far it has been more realistic to find those properties in Lithuania, in Vilnius, and also in Riga. But hopefully also Estonia will follow up with more large-scale deals and products. Main target still remains to be logistics. This is considered as some kind of a safe haven at the moment. We see that most of the investors are looking opportunities in that field, and also some investors that so far have not targeted logistics and industrial at all have announced and contacted us also, saying that we are now ready to pursue this sector also, and if you have something, just send us. But also office is very active, and what is good to notice that also sectors that have been considered almost dead or at least half buried, like accommodation, hotels. Hotel sector has been also pretty active in sense of deals. We have seen significant deals happening in Latvia, for example, and we have deals in Estonia and Tallinn also. So this is coming also. And of course, grocery retail is also still, that has always been popular. And I would say that shopping center retail is also not forgotten. There are interests towards that also. And a very good example of that is, for example, from our own experience, as we launched Stockmann properties in Tallinn and Riga a couple of weeks ago. And by the date, we have received close to 20 signed NDAs. So it shows that real estate is, commercial real estate is a strong alternative for investors if they consider investment. Yields, very hot topic, of course, always. Yields are under downward pressure, especially in logistics sector, because of the high competition and then the kind of, as a potentially the most stable sector at all. And we have seen that over the year, on a year-on-year comparison, yields in logistics especially, but in general industrial logistics sector have compressed by approximately 60-70 basis points. But also in office sector, we have witnessed about 20-30% points decrease in prime yields. So we are under pressure in that sense regarding those sectors, and we see that especially in logistics, the yields by the end of the year most probably will drop below 7% for sure in all Baltic states. What is interesting and good to see that also some alternative investment opportunities have become very popular. Especially it has been noticed that land investments have boomed quite seriously in 2021, especially in Estonia, and not by development companies or opportunistic investors. Quite typical funds, for example, have also entered this field and acquired land units for their long-term investment perspectives. So this is interesting addition to this kind of investment environment. And in general, I would say also that it's clear that investors are widening their investment strategies. There are new sectors that have been entered. For example, it is more and more clear and evident that residential sector, especially rental apartment sector, is becoming quite a norm in Baltic also. We have seen deals in all countries by now. As you see, also one of the largest deals in the second quarter of 2021 was actually related to apartments, happened in Vilnius. So this is good to see that we have this kind of more varied investment environment. And if you look the kind of best deals, top deals in the second quarter, it was quite varied. We had office portfolio deal, properties in Latvia, Riga and Vilnius. We had apartment portfolio deal, and we had also one logistics deal that happened in Tallinn. So I would say, if you look the big picture, investment market is working pretty well. We have high hopes for the rest of the year, and hopefully we will see larger deals and continuously active market. So that's all from my side regarding investment market. If you have questions, once again, you're welcome to ask them. Otherwise, I will give floor and word back to Eeriks, who will tell you more about office market.
Margus, thank you very much. As he mentioned, the market is hot and active. Same I would name for offices. And you know, if to break it down into parts on the supply side and the demand side, we see activities in both. And then when it comes to supply, a lot of offices under construction. In Tallinn, there are right now 140,000 square meters of office space in the development. I think it's 16%, or 16 projects in total. When you look at Riga, the square meters is roughly 90,000 square meters under construction right now. And if we would look, let's say this year champion in a sense of the size of what is under construction, Vilnius has more than 200,000 square meters of offices in the progress right now. So that's quite a lot for our markets and for our capitals. The next thing what we definitely should be looking at is the vacancy rates in the existing buildings. And then if you look at Tallinn, on average, the vacancy rate is close to 10% for A and B class office buildings. If we would look then into Riga office market, the vacancy is higher. It is somewhere in between 15 and 20%. On the higher end, it's for A class offices. And when we're talking about Vilnius, the situation is a bit different. So Vilnius has a vacancy rate of somewhere in between 5 to 10%, depending on the class. But clearly, that could give some, indications of where the market are moving. As I mentioned, Vilnius is the champion in terms of current development pipeline, and the vacancy rate is actually the lowest one. So that means there's a lot of activities happening on the market. And then comparing, for example, Riga, the situation is slightly different, less development, higher vacancy rate, and Tallinn stands somewhere in between out of that. What do we see on the market? We do see that it is a tenant-oriented market for all of the countries, all of the capitals. In terms of rent rates, they are stable in new developments, in new projects, offering a high-quality product. On the other hand, we do see some downward pressure on secondary offices with the 10, 15 years old buildings. They are trying to keep their tenants by offering a little bit better terms. And that's the pressure on the rent rates. What we also see is that in discussions between tenants and landlords, there's a lot of more flexibility in terms of space expansion or reduction comparing to what we've seen observing pre-COVID times. And generally speaking, for any end user who are now on the market looking for office space, it's actually really good time to find their suitable solution for them. But if we would speak about demand side and what's happening on that part of the market, is we clearly see two patterns. One of them is what there's a gradual return to offices. And that kind of triggers the activity for searching for a place in the nearest future. Let's put it to say next 6 to 9 months. We see smaller companies looking for improved solutions, or they need to change the size of the premises, and there's a lot of activity happening in there. Another pattern is related to bigger organizations where the headcount is starting from 100 people, and up there we see a little bit different pattern. They all of them are now, or slightly earlier than this time, they've been working or working right now on their workplace strategy. Pretty much we're talking about hybrid offices, how much time do we spend working remotely, and how much they do they come back to the offices. And those strategies are a little bit different. And we see these processes happening actually right this moment, with many organizations thinking to finish that in autumn or by the end of this year. And then for those who will understand how they want to work in the future, they will start an active search, because they will understand what other square meters are they required, what kind of quality of the office space they would be using for their employees. So this is the second pattern what we are observing nowadays on the market. And to mention maybe a few case studies about take-up deals in the last half a year, it's worth to mention that Alex Raidla, a legal company, have signed an anchor tenant agreement at Rossini Maia in Tallinn. In Riga, that was quite a significant deal, 11,000 square meters. SAB Business Service Center have signed an agreement for building construction with developer Gallio, and the construction works already started. And in Vilnius, there is a deal between Wargaming for 5,000 square meters and Quadrum Business Center. And it's worth to mention that Wargaming now appearing in the second slide. Previous mentioning of Wargaming was related to investments. So, it's a clear message, maybe picture to that newcomers are investing into real estate. Wargaming not just relocated the employees to Vilnius, to Lithuania as a new country, but they also were buying apartments for the employees in there. And another transaction, what is really worth to mention, and maybe our colleagues from Estonia and Lithuania would be surprised why to mention that, but for us, for Latvians, it is really important. We really hope it's going to be a ice-breaking process. One of the Riga agencies, this is a Riga Development Department together with the Construction Department, they join forces now. They have entered into the lease agreement with the private on the private market with the developer, and they will occupy more than 4,000 square meters in one of the buildings in Riga. Why it is important? Because before that, we haven't seen so many transactions happening in the Riga office market. While comparing to Estonia and Lithuania, we see it's happening on a yearly basis. So we really hope that this trend will continue in Latvia, and more government organizations will move into the newer buildings constructed by private developers. On that note, I will stop talking about offices and I will give a word to Evgenia, and she will be talking about retail segment.
Thank you, Eric. Hi, everyone. Eric and Margus mentioned that the office and the investment market are hot. So I would say that the retail market is burning. Is it good or is it bad? Let's discuss. So today I will guide you from the retail segment, and let's discuss today what have happened in the Q2, what are those notable events. Let's maybe discuss what are those consequences after the second lockdown, but at the same time, what are those opportunities which we might observe in the nearest future. So almost 1 month ago in Latvia, we have passed after the shopping center reopened after the COVID second lockdown. In Estonia, it's 2 months, and in Lithuania, 1.5 months. And actually, what we discussed that the second lockdown was much harder rather to the first lockdown. And therefore, we also may see that, first of all, the vacancy in the shopping center overall increased, not only in the Latvia, which is right now around 8.4%, but also the same trend we also see in Lithuania and in Estonia. It means that after the second lockdown, some of the shops really didn't open or decided to close. But what we see that it's related right now at the moment more to the local chains or to the retailers which had maybe not so strong chain, which they have established before the COVID. And at the same time, looking at the retail turnovers in the Baltic countries, including the online, we see that first of all, the second lockdown was longer than the first one. And also we see that there is the drop in the retail turnovers overall. However, there is some segment which really are feeling quite good and was good also during the COVID. For example, everything which is related to the home construction, DIYs continue to boom, and the trend for the construction also touched the decoration segment, accessories segment, and the really home suppliers. On the same time, we see that the grocery segment become also active at the moment, and the grocery chains, they are expanding, they're signing the new leases, and they're also acquiring some land plots, or they continue really to expand, and they see the trend also for the future with the same scale. Of course, the same segments at the fashion and the footwear, they had decreased in the sales, but it goes without saying that people are adapting, and not all people are tend to go to the shopping center. They really using the online and then became quite familiar with that, and they don't want to change something. But certainly we see that after a shopping center reopened, the footfall in the shopping center increased. And comparing, for example, to the previous week, it increased bigger because the allowed number of the visitors in the shopping center also are increased due to all the government restrictions. Step by step, we see that the people are turning back. They are remembering how to do shopping inside the shopping mall. They're remembering that this is quite interesting, and it's good to be like together in one space. And also we see that we need some more time to see maybe the similar footfalls comparing to the previous years before the COVID, but it will come, and it will come like really step by step. On the same note, we see that the trend for the street retail demand, which we observed in the previous quarter, was really short term, because as government restrictions for the shopping inside the shopping malls was released, that the lines in the street retails also disappeared. So miracle doesn't happen, unfortunately or fortunately, and street retail remain as it was before. And the vacancy in the street retail are even keeping increasing, also due to the fact that in the street retail, a lot of retailers was not maybe so strong. There was local retailers or those who has very, very limited chains and capacities also to work. From the other side, despite or in spite of the COVID, right now the Q2 opened for us a lot of new opportunities, and really the things about what we have discussed in the previous year and the quarter before really started to become, and it happened to the life. For example, the shopping center, if before we have discussed that they announced or think about some reconstruction or about some refurbishment inside already see that some of the shopping centers announced that they already start some reconstruction, or even they're preparing. For example, like shopping center Europa in Vilnius, they already announced that they're doing the reconstruction by implementing also the new food court. Or it's interesting to mention that, for example, shopping center Rocca al Mare in Tallinn, they announced that they will cut some part from the retail segment in favor of medical centers. And yes, the medical centers, this is what we have discussed a year ago, or even I remember 3 years ago, we have mentioned that the trend for the medical centers, healthcare services inside the mall, they are coming, and somewhere in Poland, they're opening medical centers inside the malls. And basically the shopping center are not the shopping centers at the moment, they are becoming community centers and the centers where people are spending their life. And here we may see the real example of what our neighbors in Estonia, they already starting to do that. And the medical center for 1,000 square meters will be launched. It will be not one like a big company, but it will be separate doctors and the private clinics who will also provide those services inside the shopping center. But we see that this trend will come step by step in each country, in Latvia and Lithuania as well. We just faced with the problem that, for example, in Latvia, our local retailers, which are doing some medical centers, they have no capacity and basically no experience how to do that. And this is the only one reason why they're not doing that. Right now, step by step, we are taking some expertise from the neighboring countries, and we see that it will continue to expand also. It's worth to mention that also some positive news, and we also see that some newcomers are coming to our market despite the COVID. And of course, there is no so big so big amount of the names which we could mention, but still we could mention something. And right now, this is the Pinko. This is the brand which have entered to the Baltic market by signing first lease agreement in Panorama Shopping Center in Vilnius. And we see that they are continue to expand, and we will be able to observe this brand also in all other countries. What is interesting to mention that despite the fact that, for example, in Latvia, the fitness clubs was closed during the COVID, this segment showed very big activity. A new lease was signed, and also the process about acquisition by MyFitness, the people fitness in Latvia, have happened. Seems like fitness clubs are really preparing for the moment when the fitness clubs will be open for all people, and people will run to the fitness clubs, because otherwise we cannot not understand why there is so big activity inside the fitness segment. And yes, as I have mentioned, MyFitness acquired the People Fitness in Latvia, and it will be replaced by MyFitness brand. And also worth to mention that despite all facts, we also could speak about some pipeline which is coming and going on in the Baltic countries. And right now, especially, we will speak about the pipeline for Estonia. My colleague Agi in the previous quarter announced that the IKEA already announced that they will build IKEA in Tallinn. And right now we also could speak about a retail park which will be built near IKEA. And we see that this trend is following from Lithuania to Latvia and right now to Estonia. That right now in IKEA, near IKEA, will be placed also some retailers which will create the synergy among this location. To sum up, in the retail segment, really everything is running very fast. So we are doing, we are acting, we are changing, we are adapting, and only afterwards we are thinking or rethinking whether we do right things or not, maybe in some proper way. But we are moving, and this is the main key of our success. And this was a short summary about the retail segment. I would like to give floor right now to my colleague Kasper, who will guide you through the industrial and logistics sector.
Thank you, Evgenia. Hello, and for the couple of minutes, the next ones, welcome to the world of industrial and logistics. So let's take a sneak peek what has happened during the second quarter this year for industrial logistics, and looking at the key highlights. So what can I say? Land is the king at the moment. And we saw several transactions across the Baltics, industrial transactions with the highest activity in Lithuania throughout the biggest Lithuanian cities. As an example, City Development sold the land plot of 9.5 hectares in Klaipėda. And well, we saw actually a couple of more 5+ hectares transaction, especially in Q2. But in generally, the demand for industrial land is rather high, and it's coming from two segments, from build-to-suit and build-to-own, and from the speculative developer perspective. And just to divide those two segments, so basically, if you're looking at build-to-suit, build-to-own, then typically the demand starts from search of existing industrial buildings, starting from 1,000 to 2,000 square meters up to 10,000+ square meters. But due to lack of existing projects in the market for sale, developers, they are in the position to switch to greenfield development. And that's why the increasing demand for greenfield is coming in. For build-to-suit, build-to-owns, that they're typically smaller scale land plots. On the other hand, those developers, they are ready to pay more comparing to speculative developers. And on the other hand, we have speculative developers looking for larger scale land plots, where also activity is rather high at the moment, but due to high competition, also lack of available industrial land plots in prime locations, developers, they are in position to look for rather creative solutions, merging several separate land plots to get the volume, taking risk of infrastructure development to secure the location and secure further development. The next thing I want to mention is the construction costs, and this is not a surprise for you. You have seen the increase on construction costs for a couple of months already, and we saw during Q2 actually that several projects were postponed. Those that were in planning stages were postponed for a couple of months to understand the situation. Also, for the projects that are in early construction stage or also in late planning stage, developers are recalculating the asking rates at the moment. And the last but not least from the highlights is the vacancy, which remains low. And you can see the bubbles there in the presentation. We have highest vacancy in Riga at the moment of 4.6% of industrial space, and the lowest one of almost zero, of almost no space available in Vilnius due to high demand at the moment in the market. So also looking at potentially postponed projects for a couple of months or maybe longer, the vacancy levels will remain low. Moving to the graphs, and you can see projects, completed projects during second quarter this year. Basically, there were 7 projects that were completed, 2 in Riga, 5 in Tallinn. We didn't see any completion in Vilnius in second quarter, but from the biggest ones worth mentioning, we saw completion of Rumbo Logistics Park in Riga by City Development, and the 2 logistics centers in Tallinn, Pakendikeskus and HK Scan. Looking at construction pipeline at the moment, so more or less the numbers are rather similar. We have almost 100,000 square meters in the construction in Tallinn. 33,000 from those are built are stock office development projects, and from the rest, the biggest ones are Sanitex Logistics Center expansion, as well as Estonian pharmacy factory that actually started construction during second quarter this year. If you're looking at Riga and Vilnius, then the numbers are more or less the same, 90,000 square meters under construction each. If you're looking at Riga, then basically largest speculative developments on the construction are A6, logistics center by Pilar of 30,000 square meters under construction at the moment. Also, Pirin development, second part of the building on the actual opposite side of the street. And if you're looking at Vilnius, then 70%, 75% from the projects that are currently under construction are speculative ones, with Sirin development and Transit Expeditia being the most active developers. When looking at the pipeline, then really surprising is pipeline what we can see in Riga at the moment. That's actually more than three times the volume that's currently under construction. Well, we'll see how the construction costs will impact the launch of construction of new projects, but we fully see that and expect that several large-scale development projects will start construction during second half of the year. Moving to the take-up, basically, if you're looking at the sectors that were the most active during second quarter this year, those were logistics and wholesale. This is mainly driven by expansions and new lease agreements, and in several cases by tenants uplifting their premises. And also worth mentioning retail trade in small business units. So this is typical stock office transaction. And if you're looking at Tallinn, for example, those 33,000 square meters in the construction at the moment are coming from 11 projects that are currently under construction. If you're looking at Vilnius, also the construction activity is rather high in terms of stock office development, and we also see some creative solution in Vilnius in stock offices. As an example, Vilnius Business Park with selling stock office units. And if you're looking at Riga, then well, in Riga is falling behind at the moment with the construction activity in this segment. But overall, if you're looking at take-up, then activity in the lease transactions below 1,000 square meters, which is actually stock office potential tenants, are one of the highest during second quarter. And looking at pipeline that's under planning at the moment, we will see at least a couple of projects to start construction in second half year. And hopefully the activity in this segment will remain high, and the developers will be happy to acquire new lease agreements rather fast. And finally, to conclude with the rent rates, in general, the rents will more or less remain stable. Nevertheless, we could expect a slight increase of the rent for the projects that are in early construction stages and planning due to developers recalculating their asking prices at the moment. So that's more or less all in a couple of minutes about second quarter, and I give mic back to Erik.
Kaspar, thank you very much. Colleagues, we will now shift into the second part of our webinar. But before we dive into that, I would like to remind once again, if you have any questions and you would like us to answer those, please write it down in our chat, and we will be happy to take them after the discussion we will be having right now. But with no further delay, let me introduce the second part of our talk. And it is my pleasure to speak today with Ursula Velve. She's the CEO of Mainar Ülemiste. That's one of the developers in Estonia, Tallinn. And the second participant is Andrius Baštas. He's a partner and CEO of Kapitalika Asset Management with their portfolio in Lithuania, Latvia. Andrius, congratulations. I do believe entered new market Estonia during this week. There was an announcement that Kapitalika have bought industrial facility in Tallinn. Let's start. Colleagues, maybe in few words about yourself, about your portfolio, market presence, and if I may start with Urso, please.
Hello from Tallinn, and welcome to the Ülemiste city behind of me. It's virtual this time, but maybe next time we are able to meet physically here. Mainor Ülemiste is actually Ülemiste City one developer company, real estate developer company, and we are having 4.5% of overall Tallinn office market, but we are developing Ülemiste City together with Technopolis Ülemiste, and we are owning 49% of Technopolis Ülemiste. So in total, we would say that Ülemiste City market share is around 15%, and we are the biggest player in Tallinn. But this is not maybe the most important message what I would like to carry. I would like to carry that we are not construct only offices, but we are developing the whole environment, as we have 36 hectares, around 700,000 square meters building rights. We have been built around 150,000. So we have still a lot of room to grow, and we can't see this area only as an office area, but it should have multifunctional usage, multifunctional area together with a lot of environmental investments like greeneries and so on. So that's maybe shortly all.
Thank you. Very impressive. Andrius, what's on your part of the portfolio?
Hello to everyone. Kapitalica is the fund management company licensed by Central Bank of Lithuania. And currently we are managing two investment funds. One of them is investing into office properties, and the second one in the logistics, the new one who just closed the deal just recently. The portfolio we are running right now is around 100 million euros, and it's going to increase pretty significantly during the next few years because of the development, the development of the Verde project in Riga, and also because of the new positions on the market.
Okay, very good. Thank you. So we got covered across the Baltics. Let me jump into the heavy topic straight away, COVID-19, and inevitably we cannot avoid it because it does impact the way we work. It does impact commercial real estate and in particular office segment. Let me rewind back in time and let's remember last year, and in March we all went into the lockdown. We pretty much were forced to work from home. We saw the stocks were falling, and there was really quite a lot of uncertainty what's going to happen. But more worrying news were coming also globally, where tech giants like Facebook, Twitter in May started to announce that, hey, remote working, let's keep it. We don't want now to force back our employees to come back to our offices. We would like to decentralize that. We would like them, flexibility to work from home. What were your thoughts? What were your feelings? What your activities? And here I would like to, divide into two parts. You have an existing portfolio of existing tenants. What was happening up there, and what was happening with your future developments? Ursula, would you like to start?
Yes, I can start. Actually, last spring was quite different from previous years, I would say, in mild way. we didn't know what will happen, and we got a lot of letters and requests from our customers because everybody thought that now it's end of world and they need to get rid of their rental agreements, and actually if we dig deeper, then there were sectors what was got the hit the most, like in our campus this restaurants and sport facilities were affected the most, and some companies actually as well. We ended the agreements, but the overall impact was around 1% of our 1% of our turnover. So it wasn't like big impact last year. And this spring impact was in similar scale. So and what we saw this spring, that actually companies were more relaxed or less stressed with this spring COVID period, and they already have been tested this remote work. We have even in campus a company called IT company called Helmes, who really piloted this remote working and how different strategies and methods will help people to work remote. But their conclusion was what they did in our one HR network event, that actually they don't want to decrease the space of office, but they want to renew it in a way that people will come back to the office, and in office they are having more social places to be, for networking, for getting to know each other. So we see that it will not affect the overall office market so much, but it will change, or it will give for the companies a possibility to think through how their offices are planned. So these regular open offices are not anymore the topic, so they need to rethink. And if we look at our vacancies, then during first COVID period, we opened actually 2 new buildings, one in Technopolis side and one in Mainor Ülemiste side. So, and right now we see that, and it increased a little our vacancy. If pre-COVID vacancy was around 2% or 1% in campus, then now it's around 5%. And we would like to see it even higher, because our promise to the companies is that they can scale. If they want to increase their operations, then it's very easy to do here. But with 1 or 2% vacancy, it's almost impossible, especially if you are talking about big IT companies. So overall, our situation is, I would say, good. And if you ask regarding the future developments, then last autumn we had the case where we need to decide, shall we start to construct new office building around 20,000 square meters? And our board and we made a brave decision to start. We got quite good construction offer, because at that time the construction market was a little bit shaky as well, and the companies may be afraid that the market will drop down. And right now we will complete this building in the end of 2022. But right now already 50% of the building is actually sold out. So it was actually a clever decision to start it.
Okay, to sum up, brave decisions, starting construction, dealing with existing tenants.
Yeah.
Andrius, how was your year during spring of last 2021?
Last spring was really scary. You know, March, April was, to say, expectations were very shaky at that moment, especially observing these what was happening on the stock market exchanges. Businesses were started to slow down and etc. But you know, it was a surprise for me and for many of people that everything, probably starting from the May and June last year, started to grow again. And even these stock prices went to new record levels, and for some unreasonable even valuations right now. So I was rethinking that period of time for myself many times, and for myself was very hard to predict what will happen and what has actually happened during last year, especially bearing in mind this mood on March and April last year. But life is an interesting thing, you know. You never know what will be next. So you have to, how to say, do everything to prepare for the life, but life happens in the way it happens. So you have to deal with that. And answering your question, how we were dealing with our tenants. So we were dealing with everyone in person, and there were some businesses where actually we gave some discounts, brand discounts, for some period of time, and these businesses were really affected because of the COVID. For example, these like restaurants, some small retail clients. So we clearly understood that if we will not give anything, so they will go bankrupt, and then we all together will be in some kind of trouble. So we gave some discounts, but in total picture, these discounts were very small from the income we receive in some small percentages. And now it came back again, and we are on a normal scale. The vacancy was almost 100%. The vacancy rate was very low during that period of time. The occupation was very close to 100%. And according to the development decision, so yes, we also made decision last year. It was very hard decision to continue to start to build Verde project. And you know, I can recall the Buffett saying that you have to be greedy when there are a lot of scare in the streets around. So we made that decision to start, and we gave pretty nice offers from the construction companies. And also we clearly understood that there will be some delays from other projects as well. So maybe we can jump into the market and have some market advantage or timing advantage in the market.
Very interesting, very interesting. Similar patterns, Estonia, Lithuania, and Latvia. Okay. Andrius, you mentioned about Verde. And this is the topic I would like to move on now. It's about what you are constructing. So Verde is a very sustainable project. It's going to be BREEAM excellent. It's going to be very energy efficient. It's one of the first buildings in Latvia where it's near zero energy consumption. Like in a sense, it's, you know, very sustainable project. Why are you doing this? It's, you know, it's cost a lot of money.
Yeah, you know, I can recall the first slide from this event that investors are asking, where are these assets? Where can they invest, especially these institutional investors? So they demand good quality or even high quality location, and of course tenancy should be very good. I'm joking when we are talking with you that we always thinking about exit. So this is in our blood, you know. When we are constructing something, we are thinking how we will exit that. And we clearly understand that building should be ESG compliant and there are no other options. And there will be no options at all in the next few years if you are thinking about to exit to any institutional investor. That probably is the main reason. Okay. And emotional, you know, we are more happy when we build something nice and something sustainable.
Thank you. Thank you. Urso, are you developing sustainable buildings nowadays?
Yes, I would say we are, because if we are having the LEED certificates for our buildings, and if there are totally in Tallinn 35 LEED certificated buildings, then 11 of these are in our campus. And the latest ones are LEED Gold, LEED Platinum, so this sustainability is very important for us, but we are not looking at sustainability only from building and construction point of view, which is as well very important because we have long-term vision and our owners own the area as long as they see their lives and their children's lives. Therefore, the sustainability is very important for us, but we see that as well the companies who are locating here, they are implementing as well their green strategies, and the office influence for their green strategies is very important. So if our customers would like to be green, then it's affected by the houses or buildings where they are locating. But the green strategy for us is actually wider. In Estonia, we are having an organization called Green Tiger, where the organization helps the other organizations to implement the green strategy. And we participated this program with our campus, and we mapped 23 different areas where we can increase our sustainability. And step by step, we are planning to implement it. And one actually very important part is waste sorting and waste management. So can you imagine that our campus, where are 13,000 people in good days, can produce in 1 year 113-floor building size of waste, this one-time food packages. So this is a very huge impact for the nature and the environment, and we want to change it. So we are doing different pilot projects to change people behavior, and as well mobility or car-friendly cities actually is the mindset what we want to change. So this light traffic, cyclists, runners, whoever. We have a very good infrastructure to use light traffic and to come by bike or by foot to the campus. So our green strategy is wider rather than just only this LEED certificated buildings.
Very well, thank you very much. So green future ahead of us.
Yeah, because money is looking for green as well, you know. But it's not
Andrew's
only
comment.
the reason why we are doing that.
Okay, very good. There was a question on chat on the construction costs, and this is actually, I also wanted to talk to you. It's not a secret. Construction costs are on the rise. We see it not only in our countries, but it's globally, and there's like nothing we can really do about it. But how do you see that? And Ursula, you mentioned already, we got a quite good construction contract end of last year. So there is a perspective on the market, at least like when I talk to some of the market players, is that, well, it's going to be less development, And for those who already started those construction works, it's going to be less competition. And so that's the advantage. There are other part of the market. Some of them they're saying, well, okay, construction costs are on the rise, but the rent rates will follow. Where are you standing? And if I start with Ursula, and how do you see this actually construction cost situation going on right now? When it's going to be over? Many topics, but many questions. But let's try to focus on them.
Yeah, right now, as we have been lately met with construction companies, then they said in Estonia that from 8th of March, the construction prices started to increase because of material prices increase. And we are quite challenging situation right now as we are having 2 development projects in pipeline, what we would like to start to construct in this year. And we see in these projects that material cost affects the construction price. But on the other hand, it is a good possibility for real estate developers and construction companies to find new ways, new methods to think out of box, I would say, how to keep this market alive and how to still move on. It could have a different agreement version in a way that that both parties are making a lot of collaboration and work together to get normal price what will work in the business plan as well. So it's very hard right now to say where it will bring us. But I would say that it's very interesting challenge for real estate developers and for construction companies, because if everybody stops this construction, then it would affect this construction market, and it generates some appetite for construction companies. It's question. How long is the period? Is it half year or is it 1 year? And nobody knows actually. And we have talked with our different experts, and actually they are not able to predict as well the market for material prices. So it's very interesting, very challenging, but on the other hand, gives possibility to think out of box and try to find new collaboration methods.
Thank you. Andrius, what is your opinion? Construction costs in Lithuania, are they different? What is happening?
Well, we are part of the world, and in the world we have plenty of new money. Governments, they are printing money. They already printed for some time, and they're continuing printing it. And actually, what we see right now, it's the result of that, because the construction activity worldwide increased a lot, and it requires these major materials, main materials for the construction. So demand is very high, and prices went up because of that. And if I don't know what will happen in the future life, but I can bet that probably economies should adapt to that. And because of a huge amount of money, and because of these materials prices increase, the lease prices also will go up. It may be a question of some time, but it should go up because of then otherwise there will not be any rationale to develop anything new. Probably inflation will show up in some. Actually, it is showing up already, but it will increase in the nearest future. And these rent prices will adjust to that. That's my bet.
Okay. Thank you for that. We talked about tenants' activities. We did talk about what kind of product are you developing and constructing? And we talked about construction companies, but there is another major part of any development, financing and access to capital. Both of you went on the market issuing bonds. Could you talk a little bit more about that? Why the reasons behind that, main motives, and what is the future of the financing of office development projects in the Baltics? Who would like to start?
Well, I can start if you wish. Well, actually, if we are talking about the speculative development, so these projects usually are unbankable. So you have to look for the alternative financing, how to finance the project. So either you can use equity or some alternative for the bank. Bonds is like still not very, say, usual financing solution in the Baltics, but it become more and more recognized. In the western part of the world, it is like a usual financing thing. So I believe bonds or alternative lending will become more and more actively used. And once you have lease or pre-lease contracts, so then it's not a question. So these projects are easily financed by the regular banking institutions.
Yeah, if I can add, then from our side, the bonds are important for self-financing. Actually, we don't have an issue or problem with banks to start with pre-zero lease project, because we have not only one building, but we have overall campus, and our banks are actually knowing us quite well that till time when building will be ready or completed, then we are quite well leased out for a specific project. Like example of our present development, where already 1.5 years before completion, 50% are rented out. But for us, the bond issuing is important for self-financing. So as we are developing so fast, basically in every 2 years we are opening new building, and in some years we are doing in parallel 2 or 3 developments. Then this self-financing, it's an important component in our financing portfolio, and we did it in this spring 3rd time. We expected to get 5 million euros, and we managed to overbook it's 1.2 times, so it's around 6 million, and we are very happy that the investors are from all Baltic countries. So the biggest investor portfolio came from Estonia, so over 50%, but from Lithuania came 28%, and from Latvia 19.5%. So even if Ülemiste city maybe doesn't say much in Latvia and Lithuania, because we are a location brand and location specific development in Estonia, then we are very happy that these foreign investors are trusting us and invested into our bonds.
Okay, very good. Thank you. Thank you very much. I see our time is slowly running up. I definitely will have 50 more questions to talk about, but maybe the last one for both of you. What will be your focus for the next 3 years? I would like to speak here more about offices, and how do you see offices will evolve in the next 3 years?
Maybe then I will start. If we are talking about physical environment, then we see that that our existing this project what we are selling right now, this Alma Toomingas building is actually done in different way than maybe regularly office buildings are done. So we started to build inside out. We took all our learnings, we took our customer feedbacks, we made an international competition, architectural competition, and we made close collaboration with service designers to understand what exactly our customer needs. And based on that, our community voted for this architectural competition works. So because our community members are here for years and all this, our next developments are affecting their interaction with that environment. So for their opinion is very important for us. And we see that that a little bit more investment into this building or into environment actually turns back in very good and positive sales pipeline. So customers are coming and knocking our doors to have possibility to come to this building, because we are having there this botanical garden to have time for talents to relax and free some stress. So that I believe the office market should focus more on the people inside of the buildings and try to understand what are the actual needs, and less maybe based on standards, because standards are already outdated. We can see that the indoor climate standard is actually outdated in Estonia. So we need to go to the next level to actually offer the comfort for the people who are actually here.
A provocative question on that note. Do the private market should, raise the standard, or should the government raise the bar?
I believe it could come in collaboration. Actually, in Estonian, this state organization is doing quite good job in digital construction area, like BIM modeling and so on. But maybe these standards, actually, as we as a private real estate developer are having maybe the best contact with customers, then this feedback from private sector should come as well. So it should be a collaboration.
Mm-hmm. Thank you.
And of course, universities actually, because we are having very good collaboration with universities who are actually making the studies and analysis and so on to explain why the standards are outdated.
Mm-hmm. Thank you. So, Andrius, what is your focus next 3 years? What's going to happen with office segment?
Yeah, if you're talking about office, our message is very clear. As I already mentioned, ESG compliance, that's not a question at all. It must be green or very energy efficient, friendly to environment, and et cetera, all these things. And actually, it's happening not only in offices, it's happening everywhere. Just think about these electric cars, and everywhere where we look, there are a lot of talks about saving nature and all these related things. So this is about the quality of the building. It has to be very high quality. And the second one on which we are concentrating is location. We are looking for central business districts only, and or close to that. So we will continue to invest into CBDs, central business districts, in the future as well.
Very good. Urso, Andrius, thank you very much for your time. Thank you for sharing your knowledge, insights, and how do you see the market. We really appreciate that. On that note, I will pick up one question what was coming from Vsevolod in chat about the construction costs, and a comment from our side is that yes, construction costs are on the rise. We do see, at least in Latvia, that some new buildings are being postponed. There is no decision to cancel. There is decision sit and wait for a few months. I'm not talking about the whole market. There are just few cases right now. We'll see how this situation will evolve further on. That would be the comment on the question in the chat. Otherwise, I think we are 1 minute late, but I think it's acceptable. And once again, thank you everybody for participating. Thank you, Ursul. Thank you, Andrius. It was a pleasure to host you here, and let's enjoy our summer, the Baltics. It's a short time. We need to go out and see the sun, and see you all Sunday in live. Thank you very much.
Thank you. Goodbye.